Why property is a powerful wealth builder. In Australia, property isn't just a roof over your head. It's one of the most powerful wealth machine you can own. A millionaire shortcut. Want to know how most Aussie millionaires made their money? They don't win the lotto. They used property. One asset that can grow in value, pay you rent, and build wealth while you sleep. In this coming episode, we will show you how to make it work for you. Want to know why property has built more Australian millionaires than almost anything else? Let's break it down. Why property is a powerful wealth builder. Why do we at Khizer & Co. and Vu Real Estate and countless other financial experts emphasize property as a path to wealth? Let's break it down. What makes real estate such a formidable wealth building tool, particularly in the Australian context? Let's start with the obvious. Property's track record would put most investments to shame. Australian real estate has a long track record of rising values over time. There are cycles of ups and downs, but the overall trajectory has been upwards. To illustrate, national home prices surged nearly 29% from late 2020 to early 2020 during the post-pandemic boom. Even after the dip in 2022 to 2023, values have rebounded and now surpassed previous highs. In other words, those who owned properties during multiple market cycles have been significant capital growth. For example, homeowners in markets like Brisbane and Adelaide have watched their equity explode. Brisbane property values are roughly 100% higher than 5 years ago. The kind of growth can vastly outpace wage increase or basic saving interest, building wealth for property owners almost on autopilot. There are multiple other strategies in the market we can talk about. In this instance, we will talk about dual income streams, growth plus cash flow. Capital growth is great, but why stop at one paycheck when you can get two? Unlike many other investments, property can pay you twice through capital growth and rental income. Over time, a well-chosen property in a growing area appreciates in value, adding to your net worth. At the same time, if you're renting it out, you receive ongoing cash flows. Well, one could say like, we know that, of course, but right now, rental returns are particularly attractive. Gross rental yields around 4 to 5% are available in several cities. And let me say this to you. In some instances, investors who wanted to invest in certain markets, there are opportunities out there where you can cater approximately 6.5 to 7.5%. This 1-2 punch of equity, growth and income is a key reason property creates millionaires. Your asset grows in value while essentially someone else, your tenants in this instance, helps pay it off. Well, isn't that leverage? And why not leveraging the equity multiplication? Now here's where it gets interesting. Using the bank's money to grow your wealth. Real estate allows the use of leverage, borrowed money more readily than almost any other asset which is currently available in the market. With a relatively small deposit, and you can secure a large asset and amplify your gains on that asset. For example, a 20% deposit lets you buy 100% of a property. If that property value rises, you earn growth on a full asset value, not just your cash invested. This is how a lot of extraordinary people grow small savings into large wealth. As your property value increases, your equity, your ownership stakes also grows. Many Australians then leverage that equity to buy additional properties or upgrade their homes. I mean, I have seen this effect now, where homeowners who experienced with big equity gains, especially in places like Brisbane and Adelaide, are using that newfound wealth to upgrade or invest further in the property market. It creates a virtuous cycle, growth budgets, more growth opportunities. In upcoming episodes, we will talk more about how to safely use leverage and equity to accelerate your portfolio, just as savvy investors do. In this game, one requires to be resilient and also creating a tangible security. And even with all that growth potential, here's the real kicker: property's staying power. Property is a real tangible asset. You can see it, touch it. People will always need homes, which gives real estate an inherent baseline value. Even when economic conditions get tough, property tends to be more stable than, say, for instance, in some cases, stocks. I don't want it to be too controversial, but there's always a psychological advantage. Homeowners often treat their property as a forced saving plan. Paying down a mortgage builds equity over time. Australia's housing market, while not without risk, of course, has shown resilience through recessions and booms alike. Barring a few rare downturns, home values have consistently recovered and reached new highs after dips. This resilience also means that real estate can anchor long-term wealth plans. It can go through the inflation and some other unforeseeable market insights. So overall, what is the summary? So when you put in all together, growth, income, leverage, stability, you have got the ultimatum wealth engine to rev it. So that's why so many Australians who achieve financial independence have done it through property. Of course, none of this is automatic or guaranteed. It requires smart strategy and often guidance. And that's where we come in, to guide, to explore, to find off-market deals, just not in few markets, but across Australia.